What's up traders, it's Nick here and welcome to another breakdown. As usual, I will be keeping it as educational as possible and also practical. So without further ado, let the intro roll and I will see you on the charts. Today, I want to speak about GBPUSD and I want to speak about it for two main reasons. Number one, there is the possibility to be looking for some quite interesting opportunities on it, and because there is a very specific lesson that I want to teach you guys in this video about a pattern that the market loves to create and complete. So as usual, I will be first covering the technical aspect of this market and I will be also explaining this pattern. We will then go and see what we have from an order flow perspective on the pound. So from a commitment of traders perspective, which is what hedge funds are doing in the market. And then by using the combination of our technical analysis and our order flow analysis, we will be able to understand where we can be looking for some good opportunities on this pair. Now, starting here from the monthly time frame, what we can see. Now, here in the monthly, we consider the market has just completed this impulse correction and impulse pattern to the upside, and obviously now has created a higher high. In fact, what we can see is that not only the market broke above the previous high, but at the moment we are testing a very strong supply zone from a monthly perspective. In fact, if we look back, we can see that from here the market had started all this move to the downside, and currently we are testing exactly the same supply zone from which there is definitely the possibility to see the market create a deeper rejection. So here on the monthly time frame we're testing very strong supply, and we did expect the market to create the rejection that we're currently seeing. In fact, at the moment we can see how last month the market tested this supply and obviously got rejected to the downside. Going down on the weekly time frame, what do we have now? Here in the weekly, we can see a very similar scenario. In fact, we can see how the market also here in the weekly has just created and completed this impulse correction and impulse pattern to the upside, rejecting the previous weekly resistance, now turned support that we had at this area. In fact, here we had this previous high, which the market broke to the upside, and at that point, the previous resistance was turned support, and we did expect the market to provide this rejection to the upside, which is in fact exactly what the market is currently doing. And the market has now created this quite strong overextension to the upside, and the start of this retracement was pretty much expected. Now, generally speaking, if you have an impulse in the market and you want to measure the correction, what you have to do is take your Fibonacci from the low to the high of the impulse. And if we take our Fibonacci from the low to the high of this impulse and we place it even more precisely, what we can see is that at the moment we have broken and closed below the 0.32 of the Fibonacci taken on this impulse. However, we haven't tested the 50% yet. So there is definitely the possibility to see the market provide a deeper correction here on GBPUSD from a weekly perspective. Going down on the daily time frame, what do we have? Now here on the daily, I want to speak about a very interesting pattern which the market loves to create and also complete, which is basically a 5 waves pattern. In fact, many of you probably might be a little bit familiar with Elliott waves. I like to take the concepts and simplify them as much as possible with what the market actually creates and what is actually easy to test in the market and have some clear numbers on how many times a market actually completes a certain pattern. Now, in this specific case, this is a pattern that the market loves to create and complete, which is a 5 waves pattern. You basically have an impulse, correction, another impulse, another correction, and then you have an overextension to the upside. So basically 1, 2, 3, 4, and 5 waves to the upside. Now, after the last overextension, this is where the massive, strong correction comes. The market melts to the downside and goes and completes the pattern at the previous resistance, now turn support, which is in fact exactly what the GBPUSD just did, because we had 1, 2, 3, 4, and the last leg, which is the overextension. And from here, we definitely expected the market to create this move to the downside, to go and complete the pattern itself at the previous resistance, now turn support. In fact, when the market was here, I made a full breakdown explaining all the reasons for which, from here, we expected the market to provide this move to the downside. And by the way, I will link this previous analysis in the description, so you can go and check it out for further reference and more free education. Any questions or requests for the next videos, make sure that you leave them down in the comment section below. Also, make sure that you smash that like button and subscribe. Now, if we go and see what we have from a COT perspective, so commitment of traders, which is what hedge funds are currently doing in the market, what we can see is that with the last report on the pound, hedge funds have now opened 7.9k long positions and closed 800 shorts, increasing their net positions from 22k to 30.9k. So after the move to the downside, during this move to the downside, hedge funds have been adding more longs. So there is definitely the possibility to see the market reject this demand area that we have here from a daily perspective. Now, keep in mind a very important thing. When you check the COT data for the GBP, you're actually checking GBPUSD because all currencies on the spot are traded against the USD. So on GBPUSD, hedge funds have added longs and closed shorts during this move to the downside. So there is definitely the possibility to see a retracement from the weakness that we're currently seeing on the pound. So there is a potential short-term longing opportunity for a retracement at least to the 0.32 of the Fibonacci taken on this impulse. So we do expect the market to provide a correction at least to this 0.32 of the Fibonacci taken on this impulse to the downside. Now, how we will be approaching this potential opportunity? Now, as usual, we will be reactive and not predictive. The monthly, weekly, and daily timeframes, those are the best timeframes for the direction of the market. But when it comes to confirmations and entries, the best timeframes are the 4-hour and obviously intraday timeframes, the other intraday timeframes. So with students, what we will be doing is monitoring price action from a 4-hour perspective and lower during this move to the downside. And we will be waiting for the market to shift from a 4-hour bearish market as we have right now to a 4-hour bullish market. And only if the market will shift from a 4-hour bearish to a 4-hour bullish market, only at that point we will be adding GBPUSD to our watch list with students. And as soon as the market will provide to us one of our valid entries, we will be taking a nice long with a very good risk to reward and very good probabilities at that point for the move to the upside and for the market to retrace at least to the 0.32 of the Fibonacci taken on the daily impulse. If you enjoyed the video, make sure that you smash that like button and comment below. It really does support the creation of more free education analysis and updates for all of you. You can also go and check out the mentorship program. The link is in the description. It's a very complete program. First, you get all the rules of my rule-based strategies, and then you trade them live with me. Each and every day, I give you a new daily market breakdown showing you how to apply the strategies with the entries, stops, and take profits, as well as answering all your questions every single day, including the weekends. So it's a very complete program. I really suggest that you go and check it out. The link is in the description, and I will see you in it.